Karimaka, everyone, and welcome back to the India Market Review. This is Saturday, 24th April 2026. Um, and It's going to be around 4:15 p.m. India's time by the time we finish this review. As usual, disclaimer that this is not financial advice. This is for information and educational purposes only. Please do your due diligence before making any investment decisions. Um, so let's jump in. It's been definitely a very interesting week, or rather, a week that has shown the markets to be very, very much, I would say, fractured. And there's definitely a lot of difference in how various different indices are behaving, as we shall see, right? So what you're seeing on the screen right now is the India Nifty index, right? And before we jump into that, just to get a very quick perspective of how things are across the world after the week got over. Let's just jump in and look at the global markets, just to get context about how we are relative to the global markets. As you can see, the Dow Jones index on your screen, on the middle is the daily chart. Really nothing happening there, right? No fall. It's a consolidation after a good rise. There is a sort of flag formation, you could say, that's happening in the Dow Jones. The S&P 500 index actually making new life highs, right? So US is going gung ho. The Nasdaq making even further life highs, right? Going up and up for the last whole week. So obviously not all tech stocks. That's something that we discuss in a separate webinar. But certain tech stocks are doing extremely well. S&P 500 new life highs, Dow Jones just there. And if you look at also the Russell 5,000, that's also made a new life high last week. So US all very bullish and quite positive. If we quickly look at the rest of the world, we're looking at Toronto here, might make a new life high in the coming week. You're looking at the DAX now, and not yet there, but definitely showing strength, sitting on all these long-term moving averages. Bit of a correction last week after a big run up in the first 3 weeks of April. The CAC, basically similar picture, right? That's France for you. And the UK, little bit of weakness, but again, in a nice uptrend, right? So UK has been just making uptrend after uptrend in the last, in the whole of this year, actually, right? So that's very well placed. The Nikkei there, as you can see, another fresh life high on the Nikkei. So the global market's doing really, really well, as you can see. And then you have the Australian market, not so good, a bit of a correction, but again, well placed within its long-term moving averages and showing good strength. Coming to Asia and looking at the Shenzhen, right? So one of my favorite indices that I keep talking about. Again, showing strength, as you can see, every day for the last week, except Friday and Thursday, up, up, up. Hong Kong, HSI, again, good strength, sitting on the long-term moving averages. And um, from a longer term picture, from a weekly or a monthly perspective, more likely to go up. Singapore has corrected, but if you can see the top left screen, consolidating toward its life highs for from September 25 to now. So something building up in the longer term. Wouldn't say there's longer term. There is a case for being a little careful here with the monthly RSI at pretty elevated levels, right? Just wait and watch. But definitely consolidation, no weakness at this point. Right? If you're looking to Korea, South Korea, that is, well, there you have it. Another new life high on South Korea. Basically, you could say tracking US markets, technology stocks doing very well there. And then you have the Taiwan index, and that is doing really, 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 really well, as you can see. Right? That is something that we've been saying. Global markets are doing way, better. Um, Southeast Asia, Indonesia. clearly weak. You have the Nasdaq Indonesia index also very weak. You have the Nasdaq Malaysia index, which is actually showing some, decent strength, though a long way away from its own life high. And then you have, let's see, I'll come to Nifty last. Coming to the Middle East, the TASI, which is the Tadawul of Saudi Arabia, showing significant correction. But like I've been saying in the global market review, if you look at it from a weekly perspective, from June of last year, just going sideways, did not break down during the conflict that is going on and actually consolidating. And this could just be a correction that is happening right now. And you see Tadawul regaining its up move after this sort of triple bottom that it is happening. Clearly, some consolidation going on there. Um, you have this is the Abu Dhabi exchange really struggling, not recovered like the rest of the world. The Middle East conflict is still very much there, and the local markets are still under pressure and not really showing any significant uptrend. This is the Doha index for Qatar. That's actually showing a nice flag. It's stuck between long-term moving averages, and it could break out if something happens. And again, um, talks happening in Islamabad with Pakistan mediating this weekend, and who knows what comes out of it. You never know something, either which way. Last time, like many people in calmer hindsight thought that it was too much to expect that a 20, 40, 50-year-old conflict would suddenly get, resolved in a 21-hour marathon discussion. But obviously, steps are positive. Things have moved forward after saying no in the beginning last whole week. Then the Iranians have agreed to come and continue talking. There's really no other way, right? Um, yeah, and then all right, I'm going to skip the South American markets just for the purpose of this discussion. I'm sticking to the India market review. So you can see that most of the world doing quite well, quite bullish, especially Europe and the US, including the Middle East, right? And of course, you have Asia, the major markets, Tokyo, Singapore, Hong Kong, China, and all. But when it comes to the Nifty, right, we are definitely struggling, right? In the sense that, well, while trapped below the between the moving averages, sort of strength that the rest of the world has shown, major markets, we are still yet to show that. We may, but right now we are not really showing that. And last week has definitely been more of a corrective move rather than a bullish move that most of the other global markets have shown. Right. And we'll get into a little bit, not a little bit, actually quite a bit of very clear understanding of why India has been affected in this specific manner, right? So we sort of did a very quick global market review. The usual global market review is more detailed, but this gives us, I think, good perspective on how things are and how India is with respect to the rest of the world, right? All right. So once we've done that, let's now jump into the India market, right? So this is already the Nifty market that you're seeing. And if we look at the broad market, CNX 500, and like I've been saying for the last many weeks, the broader market in India has definitely been doing better than the Nifty itself, right? Relatively speaking, right? And now coming to the individual sectoral indices, and I'm going to do a bit of a deeper dive in today's webinar too, so that we have a better understanding. Bank Nifty, right, stuck between the long-term moving averages, just correcting and playing around. In the Bank Nifty, you have the private bank index, more or less exactly the copy. And if you just focus on, let me, do this, just keep that as the longer term chart. Sorry, the daily chart. You'll see this is the Bank Nifty. You'll see the private bank Nifty index, also more or less a copy of that. And the PSU Bank now also within, sorry, is that, uh, Right. So PSU Bank Index, right, as I've been saying, has actually been doing better, and that continues to do so in the current last week also, right? So that's the private bank for you index, and this is the PSU Bank Index. You're saying that basically because the PSU Bank Index is sitting nicely above all the long-term moving averages, while the private bank index is not. It's stuck between the two, right? And this theme has continued for the last 1 month, right? And if you, those who've been regular on the webinars, would have noticed this. Right. Looking at the IT index. Now, this is the big story for this week, that the IT index basically has, in a sense, come back to the March lows. And as a matter of fact, indeed, it has broken it. So if I were to just clean up this chart, you will see that if this was not, if this is the low of the March fall, and let me make that very clear, right? You can see that this was the low and we are just there, right? We are just very, 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 very much there. And quite likely that, if it does not hold, then we could definitely see much lower levels. And I'm going to go a little bit deeper into this. I'll come back to this in a after covering all the indices to look at what is happening here and what is the things that we should perhaps be watching out very carefully going forward, right? Uh, right. Okay. Right. Hmm. I'm just checking something. I'll come back to that. All right. So keep this in mind that the IT index has really, been hammered down in the last 1 week. And while we continue the looking at other sectoral indices, keep in mind how the IT index is versus how the other indices are. So moving on to auto, right? Auto you can see is right, has corrected, right? Okay. I mean, there was a sideways move for the most of the week, and then Thursday, Friday, it corrected. Look at the CNX metal index, and that clearly is an outperformer, right? Again, something that we've been saying, it's really made a new life high. Okay. And we kept saying last 1 month that metal is where the action is. That action may now get subdued, right, for various technical reasons that we'll not get into in the webinar. I'll just make it a little too long for now our audience nowadays, especially the post-COVID audience, which has quite limited attention spans. But yeah, so the metal index could see some sort of sideways move or maybe even a correction. And the upside for the coming month for May, let's say, might be subdued, definitely going to be subdued, I would say, compared to how April was. Right. The commodity index, right, that also made a fresh life high, not by much, right, just corrected more like a double top, as you can see on the monthly chart on the left here, right? So it's like a double top. Will it break out or not? The jury is out. As of now, it's just better to be cautious and watch on the sidelines. The FMCG index really, definitely an underperformer, like in the sense that, like you saw the metal index doing really well, you saw the commodity index doing really well in the sense that they made new life highs. But the FMCG index is this the monthly chart is clearly a drag. It is basically at levels where it was in 2023, right? However, showing some strength, showing some consolidation, and could do well in the coming month, right? Uh, on the energy side, the energy index did a nice breakout and has continued to do well. So these are all your PSU oil and gas related companies like Petronet, GAIL, Gas Authority of India, etc., into distribution and processing and all. With the reduction in the tensions in the Middle East, there's obviously a lot of hope for revival on that. But again, in the short term, probably overbought and uh, technically speaking, so may again have a correction coming forward. The reality index, sorry, the infrastructure index going sideways, and you can see on the top left again, sort of a double, triple top where it'll break out. I think that's a little far-fetched right now. It's probably going to correct a little bit more before we see an upside. The realty index also the same way. Nice run up, right? Long way from its life high, but I think there's also a fundamental talk about pressures in the real estate space beginning to build up with various things happening on the IT side, right? Layoffs and salary cuts and things like that. And IT jobs are a significant driver, if not the primary driver of what happened in the real estate space in India. Pharma, again, like we said in the previous webinar, has been underperforming. On Thursday, it did a remarkable, breakout, and some of the pharma stocks did exceptionally well. But on Friday, it just corrected and is just going through this consolidation for the last 1.5 years. Still no clear sign or directional sign that is going to break out and keep moving up or break down and move down. Just sideways move. Stock specific opportunities are there, but as far as the index itself is concerned, it's just consolidating still. Then you have the services index, which has corrected more than others. And the media index definitely done very well last week, right? That was a laggard for the last, in the beginning of April, but has done exceptionally well. Notice how technically, these things really work. I'm not cherry picking, just observed it and then therefore mentioning it that this went and hit the 200-day exponential moving average and then corrected from there. On open, it went there and then corrected quite a bit for the rest of the day. It just got dragged down with the rest of the negative sentiment in the market. Uh, to complete, we are talking also about the public sector enterprises. You can see that no correction, as a matter of fact, right? Really, really well positioned. And central public sector enterprises relatively underperforming, but the CPSE stocks, all really good. And just coming back to this is nice. The weekly chart, can you see? It's a nice double top that is possibly there. Whether it creates a top and corrects, and then we see some move up, or it breaks out. I think just we'll see next week. If again, there will be stock specific opportunities, but probably not something on the overall index. All right. Uh, MNC index, just to see how that is doing, right? Just come there and wait and watch is what is going on. Now, like I said, just a few minutes back, the deep action and the thing of concern and to watch is in the IT space, right? So IT index clearly being hammered down. And let me very specifically come down to a few stocks that are there in the IT space, right? So I'm going to just highlight a few just to drive some points home. Now, so we'll start with Infi, right? And I think this drives home the point of what is ailing the IT space. So this is the daily chart, right? I'm just making it as clean as possible. Okay, fine. And you can see that, just hammered down, went below the March low levels, absolutely no sign of any strength at all. Now, when I get all the stuff back and then watch here, there's the earnings that is there. And do you see what, you can see it on the screen that Infi actually posted a really positive result, a really good quarterly result with a 17% upside surprise in earnings and a 2% upside surprise in revenue, right? They also announced that they have successfully or negotiated a lot of AI enabling deals with a lot of their customers in almost all the verticals that they have, healthcare, IT, aerospace, whatever, infrastructure and all. Despite all that positive news, the Infi stock was down 6.9%, 7% in just one day. And notice this, if you can focus, okay, let me clean this up again. Oh, sorry. This volume picture also goes. I'll have to bring this back. There's a big, volume spike. This is like 3, 4, 5 times the average volume which has been there for the last several months. So Infi really got sold off despite all this positive result that it posted, right, in the quarterly space. Before that, earlier in the week, HCL, so this was on Friday, and HCL posted a result, and look at how badly HCL got hammered, right? And HCL posted a result earlier on Tuesday, and the negative surprise was down 5%, and on the revenue side down 1.3%, and it really, really got hammered. The management also mentioned a lot of caution, saying that things are going to be tough, and the market is looking a little wobbly. I mean, market in the sense the business environment is looking wobbly, and it got hammered. And then the Infi result came out on Friday, and then it got hammered even more, right? Now, if you look at all this from a long-term perspective, you're seeing the monthly chart here for HCL, right? Um, there's very little good news here, in the sense that you could say that maybe there's some support here, but that's still at a lower level of around 1,000, 100. Do we even see 900 on HCL? I don't know, right? But this is quite possible with the way that we are seeing that the stocks are being hammered down, the IT stocks, right? And this is happening on terrific volumes too. So this is not small time retail selling. This is institutional level selling that is happening. So the big guys are just exiting this. They were perhaps waiting for the quarterly results to see what the results would be, what the management would say, and then they were going to take the call. And this is what they have done. So FIIs or mutual funds or whoever they are, that data will be available. You can always Google it up and have a look. Will show you that there's been bulk orders that have been placed to exit. Look at TCS, right? TCS had already reported results, again, negative, but that was in March, okay? Sorry, 9th April, for the period ending March. And not much of this thing, very much in line. I mean, hardly, it was very much within the market expectation, analyst expectation of what the earnings and the revenues would be. And it didn't really react much, right? As a matter of fact, on that day, it went up. But post HCL result, post Infosys results, it has just been beaten down with the rest of the big boys. Uh, but the sentiments in this market have definitely been impacted very, very negatively, and this is something to keep a very sharp eye out on. Uh, Comes back to the discussion we were having last weekend. We were saying about, should we be in it? Is it a good time to buy, or is it it's a good thing to stay away? There were some of you who responded with some different opinions on it. Some said maybe it's a good. Some said actually categorically it's a good buy, that they would buy. Others were like not so sure and all. And my opinion is that the AI story has not really been resolved. That's for sure. I mean, I think everybody agrees with that. Some people are of the opinion it's overhyped and overblown. Some others are like, no, it's still going to bleed a lot. And I think both the HCL and Infosys story together basically say, if you look at the what the management said, there is period of uncertainty. Of course, the management is going to sound bullish. You don't want to take that too much to heart. You want to carefully listen to what their warning signs and reservations are. And clearly, they have concerns about the business environment going forward. Some very big clients, both at especially at HCL Tech, I think, have put their projects on hold, making a significant revenue hit. And there is pricing pressure everywhere, and they are getting those price cuts, right? Whether it is because of the rupee devaluation or whether it is because of AI, probably both, they're getting. So the margins are also probably getting squeezed, right? Um, so IT is definitely not out of the woods, and this is basically what IT index was down 5% on one day, for 3.5, 4, 5% on one day on Friday, right? And this is what basically drove the Nifty down, right? Um, so clear demarcation in the Indian equity markets. IT space is being hammered. The other spaces like metal on the other side are doing extremely well, right? And bullish. Um, you do see this sort of market differentiation oftentimes. And I go back to what I was saying earlier. I think two webinars back, go and have a look. We said this is a market where stock picking is becoming far more important than going always into the index and saying index investing. If you're doing specific index investing and if you know how to do it, then fine. But overall, broad-based index investing is definitely a challenge, and India has definitely many headwinds on its economic front, and that will probably show up on the uh, pricing behavior of the overall index, Nifty, the Sensex, etc. But clearly, lots of action, very specific action on the individual indices, sectoral indices. So if you know how to rotate money in and out of indices and accordingly, or do stock picks and all, fine, good. Right? That's I think the theme of the market, the theme of how things are going to be for probably the rest of this. At least calendar year, I would say, if not the rest of the entire financial year. That's the take home message. India underperforming the rest of the world, and within India, some sectors doing very well and some sectors not doing well at all, right? So that's basically the IMR for this weekend. Hope it has been informative and instructive. I would always, as usual, like to have your feedback and input. So I look forward to that. So do keep bringing that in, and I will see you next week again on another IMR, inshallah. Also, probably do some more other market reviews this week, a global market review, maybe bullion, maybe some crypto. Haven't done crypto for a long time to see where it is. Some interesting moves happening there. Seems to be getting some oomph back, right? So yeah. So thank you so much and stay in touch. Goodbye.